Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're getting into week 24 of our weekly numbers, our portfolio update. And this is as of today, January 4th, 2025, so Happy New Year. This is the first week into the new year that we're going to be doing this update. So let's get into it. Pardon me. On January 4th, 2025, which is today, our current portfolio net worth is $320.83. So you see, we always have our pie chart here, which shows our allocation percentages in this visualization, I should say. We have our portfolio weekly data for week 24. This is from December 30th to January 4th. No new net cash flow, so no new cash coming in. We have a market weighted rate of return of positive 1.07%. We have a market gain of $3.23 and no dividends earned. This is our weekly data for week 24. Then we have our monthly data for week 24. This is from December 4th, 2024 to January 4th, 2025. We have net cash flow of $30. So as always, that's when you see this large spike on the chart. So every 3 weeks, we deposit $30 in cash into our portfolio. We have a money weighted rate of return of negative 0.93%, so down 0.93%. We have a market loss of $3.84, minus $3.84. And we have a dividend of 12 cents that we earned. Getting through this cold season. We have our portfolio quarterly data for week 24. This is from October 24th, 2024 to January 4th, 2025. We have a net cash flow of $121.27. Every time you see the stair step, that's a $30 deposit. So you have 1, 2, 3, 4. So you got the $120. And usually our dividends and cash get thrown in there as well. So that's where you see the $1.27. So that's where you see the stair step pattern. We have a money weighted rate of return of positive 1.92%. We have a market gain over that time period of $4.72 and a dividend earned of 25 cents. So it says week 24 from October 4th to January 4th. Be clearing my throat this whole time. So we have our weekly percentages. We have our target weighting here on the right. So gold still at 30% for a GLD ETF. US dollars at 20% for our UUP ETF. Commodities at 15% for our USCI ETF. Bonds at 15%, or US bonds at 15% with our GOVT ETF. Equal weight stocks at 15% with our RSP ETF. And Bitcoin at 5% with our IBIT ETF. So this is our weekly numbers here. Here's our weekly percentages. So gold for the week of or this past week, 28th to 4th, 0.86% for a gain of 83 cents. US dollar up 1.10% for a market gain of 69 cents. Commodities up 2.62% for market gain of $1.25. Bonds up 0.23% for a gain of 11 cents. Our equal weight stocks down 0.21% for a market loss of 10 cents. And Bitcoin up 4.29% for a market gain of 63 cents. Man, apologies. So this is our weekly data for week 24. Our monthly data for week 24. Gold down 0.19% for a market loss of 18 cents. Dollar down 1.59% for a market loss of 99 cents. Commodities up 2.31% for a market gain of $1.07. Bonds down 1.51% for a market loss of 71 cents. Stocks down 5.23% for a market loss of $2.49. That's a pretty big drop off. Stocks the past couple of weeks have definitely been coming down. Remember, this is the equal weight index, so there's also the S&P index as well, the main index that's also come down. And then we have our Bitcoin up 2.75% for a market gain of 41 cents. Those are our monthly percentages for week 24. We have our quarterly percentages for week 24. Gold down 0.95% for a market loss of 76 cents. US dollars up 1.68% for a market gain of 78 cents. Commodities up 4.94% for a market gain of $1.93. This is what I've been interested more in, probably adding to commodities. We'll see though. Bonds down 3.72% for market loss of $1.80. Stocks down 2.86% for market loss of $1.07. And Bitcoin up 61.91% for market gain of $5.91. There's definitely big hype coming into election, so Bitcoin's still up pretty high for that, but it's been coming down more recently. And I've added this slide. This is my New Year's resolution right here, to try to add more transparency to this these slide decks. So I'm going to put in the portfolio changes. So as of 7/31/24, this was the first change we made because we started the portfolio in January. So on July 31st is when we made the first change, but we first made the portfolio in July of 2024. So on July 1st, 2024, our USCI position, I decreased it by 5%, and I moved that 5% into government bonds. So that's the plus 5%. So decreased commodities 5%, increased bonds 5%. On August 5th, 2024, 8/5/2024, decreased USCI position by 5%, decreased commodities, and increased government bonds by 5%. So same thing, decreased, so two different times, so 10% total between these two movements. On August 26, 2024, our US dollar position, we decreased by 5%, and we moved that 5% to our government bonds, so that was increased by 5%. So decreased dollar 5%, increased bonds 5%. Then on October 8th, 2024, decreased government bond position by 5%, increased commodities position by 5%. On October 21st, 2024, decreased government bonds position by 5%, increased stocks position by 5%. So decreased bonds, increased stocks. Then on November 18th, 2024, decreased government bonds position by 5%, increased US dollar position by 5%. That was the most recent portfolio change. Now, I don't include anytime we add cash into the portfolio because that's not a change of the structure of the portfolio. That's just adding cash. So if the percentages are the same and we're just putting cash in, you're not going to see that change on here. It's only when I change the percentages of each asset class. So if I increase or decrease. So I'm going to start adding that to this slide deck here. So that way you can just kind of see as I'm making changes and when I make changes. Right, so we had no portfolio transactions this week. Now we have our Illuvium staking. So it's for week 24 as of today. Illuvium price is at $42.32. We have a total of 5.92 IOV that are staked for a current market value of $250.44. Down here at the bottom, we have the RevDiz total claimed so far. So we have 0.024 claimed IOV for a total with a market value of $1.01. So that's 3 different Illuvium distribution payments we've received so far since July. And currently we have no new revenue distribution. We have our vesting. So we have our six individual vests. So the most recent one was on December 23rd. So you see July 27th was the first, August 24th was the second, September 25th was the third, October 25th was the fourth, November 25th was the fifth, and December 23rd was the sixth one. You can see these lines kind of showing you the further they go across, the sooner it releases or it unlocks. So our soonest unlock will be in 204 days. The most recent one will be in 353 days. So basically around Christmas in 2025 is when this one will unlock. And remember, we stake our Illuvium, we buy $40 worth every month, or once a month, and we stake it for 1 year. And whenever there's a revenue distribution payment, we'll get a little piece of that cut. And currently, we don't have a revenue distribution payment for week 24. And we have no Illuvium transactions for week 24. And that is it for our weekly numbers. So now, of course, we get into our charts. We have, I'll look at that year to date because it's only been a couple of days. So we have our gold, as you see here. It's been in this long uptrend. It broke down right here around December 18th and the 20th, between there. And it's kind of gone sideways. It looks like it's coming up a little bit, but it's going sideways. in my eyes, because it has broken trend, I'm thinking about decreasing it, but we're in a couple volatile weeks. In the holiday season, the election inauguration's coming up. So when the election happened, you see right here this drop in this candle, the November 5th, 6th right here, this large drop right here. There's volatility around the election time, and there's still, in my opinion, my personal opinion, I think there's still like uncertainty in the market. People don't know which way to go with their investments, so everything's kind of like pulling back. People are selling out a lot of their ETFs, which is fine. So I haven't made a change yet. Of course, I'll always let you know. I'll update that. But as of right now, we're still 30%, our largest allocation for our portfolio, into gold. I would love it if it reclaims this trend. So if this little bit right here comes back up into this green area and continues up, that'd be great, because gold is the majority of our position right now. But as of right now, it's out of the trend, and if it continues downward, I'll likely be reducing it. But I'm still kind of just waiting and watching. So we have our US dollar position. You see this large drop right here. So there was a dividend distribution payment. So what people do is you kind of see right around here, zoom in, right around this area, there was a pop-up, and there was the EX date. So it's the declared dividend date. So you basically have to own the ETF prior to the EX date. Then after that, you get the payment, and then people cash out of it. So that's why there's that drop. Also happened back in the previous year, back in December. So that's where you see this large drop. In the future, if they do an annual dividend distribution payment like that, I should probably pull out before that gets declared, because I don't want that drop in my performance, but it is what it is. I think the overall trend is still bullish despite this drop right here. The US dollar has been coming up since right about here, September 30th, has been coming in an uptrend. And I see right here again, post-election, this large green candle right here, this spike. There's just a strong pop right here, so like post-election. So I do think we're kind of in a more strong dollar environment. So we have the US dollar at 20% right now. Our equal weight stocks. So we definitely broke out of this longer trend right here. And I just put this second line up as like a possible trend that it's trying to hold or maintain. I'm not sure yet. I don't know if stocks are going to keep selling off. If we go to the S&P, you see it was like topping around this trend here. Let's see if I go all the way back. Let's see, right about here, November 22. You see it was basically in this uptrend. And then we kind of started peaking around this area here, and then it came down. So it's been coming down, but it's still in this trend. So this is the S&P 500. This is not an equal weight ETF. It's heavily weighted into like about 7 stocks, the big names that everybody knows, like Google and Facebook and like Tesla and stuff like that. So I use the equal weight because I want an equally distributed index, basically, of top 500 ETF or top 500 stocks. But it is also coming down, just to show that. So if we go back to mine, it broke out of my trend, but still much higher than what it was back here. Even higher than actually where it peaked in January of 22. So it's still up. So I may reduce my position. I don't know. Very volatile time right now. Very volatile time. Also, if you look at, should probably look at this first. The volatility index, the VIX. You see we had this large spike back up in August. That was a big deal. We had this large spike back in mid-December, December 18th, December 20th. That was another big deal right there. It's very brief though, because it came down very fast. But this was where the drop started happening in the index. So if you look at S&P, here we are, that 18th, that same time period. Look at that drop, just right here at the top of the trend, and then just drop. Right, so it's a very volatile day, or a couple days, I should say. So right now, just watching and waiting. I would really like to say that I don't know what's going to happen at all. But I would like to say towards the end of January, we start to see a little more consistency in some of these trends, where I can make a better decision. Right now, I'm just kind of holding the line and not trying to move. I don't want to be too preemptive. One trend that I've absolutely loved is our commodities ETF, going back to July 22. So all the way back here, just been in this continuous uptrend, and it's actually peaking up here, right around this trend right here where we're at right now. So if anything, if this trend continues, and I do believe inflation is still going to continue further into the next year, I kind of doubt it's going to be a sharp reversal, because the inflation compounds every time you see the timestamp, the inflation number. It's like it's adding. I believe we've had roughly a 25% increase on inflation since the beginning of the pandemic in 2020. So it's a lot of inflation. A quarter of our purchasing power has eroded, unfortunately, of our currency. So the alternative to your currency eroding and losing purchasing power is to own commodities while inflation's going up. That's basically what this portfolio is showing. So I may increase, I keep saying that, but I'm just like I said, I've been waiting, but I may increase more to commodities just because it's in this continuous uptrend. Although it is peaking towards the top here of this trend line, so I don't know what's going to happen. Our government bonds position. There was a sharp climb right here. It's very brief. I even question it because it doesn't even show when I zoom in, but I think there was just an initial pop in bonds for some reason. Still compared to the slow trend, it hasn't bottomed, so we have a low point here back in October 23. We have a higher low here in April 24, and then we have a higher low here in December 24. So it's still, if I were to draw a line just on this instead, maybe I should do that. Change this line. Actually, I'm gonna keep it as is, just because right now this is kind of what I've been working off of. But pretty much from this point to this point, now to this point, it wouldn't be a straight line, but this is like the kind of trend pattern. I don't know what's gonna happen with interest rates. Interest rates seem to keep going up despite the Federal Reserve trying to bring them down little by little. So the market's basically saying no when the Federal Reserve is saying yes. And unfortunately, I have not made good trades in the past with bonds, so it doesn't surprise me that I'm going to get this one wrong. But bonds are a strategic asset in our portfolio, so we still have to allocate a certain amount of capital to it. Right now, 15% could reduce it to 10, but I do feel like at some point there's going to be a flip. When, I have no fucking clue. I think some point it's going to be a flip, and that 15% position is going to be, you know, a lifesaver in this portfolio. But I mean, it could be a long time before that happens. At some point, like this bottoming that happened from like this 5-year trend from the beginning of the pandemic back in March, April, coming all the way down here. I feel like at some point it's got to flip. But unfortunately that day is not today. So we have our Bitcoin ETF, IBIT. So you see this is around here in this top, mid-December, December 15th, December 16th. We had our peak. I think we're about above 100,000 here. And then it came down. We're still relatively high, above the $90,000 range. Let me just check the exact price. Yeah, so we're at 98,000. So we see right here above this peak, we hit about 107,000. So we're still really draw it back. I think I showed this. Maybe I didn't show this. I'm kind of looking at this long-term trend. So this is back, let's put it here just because, but 2016. And then we hit this peak in 2017, and then we hit this double peak, one in 2021, one in 2022. Then we hit this another peak in 2024, December 2024. And I'm not saying it can't break up above this line, but it's interesting that how this line syncs up, you know, peak, 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 and then it kind of just syncs up with this long-term multi-year trend line. So I don't know what's going to happen with Bitcoin, but at the very least, it was like peaking around 100,000. 100,000 is a big round number. Market psychology loves big round numbers for whatever reason. But we're going to watch and continue to see what happens. There you go. At the very least, it's been holding above 90K. So, and I've reallocated at least once, I think. Or did I? Can't remember. Yeah, I think I did. I reallocated at least once along here in November when it was post-election. So some of those gains I did move into the other assets when I rebalanced it. So I did take some of that profit at least. I didn't just hold it, like not sell. There's a lot of people in the crypto community will tell you to do HODL forever, which I think is stupid. If you're an investor, at some point you're going to want to cash in on some of your investment and use that money for something else in life, you know, buy a home, get something for your family, pay bills, whatever. So at the very least, it's still a 5% position in the portfolio. I don't see that changing in the near future. If we're ever really bullish on the stock market, I look at Bitcoin as kind of like accelerant on top of the stock market. So if the stock market's doing really good, I think Bitcoin's also going to do really good. And because it's so volatile, it's going to move a lot further, a lot faster. But I can't really see myself bringing it to like my largest allocation, like gold, which is at 30%, because that's such a large position in this portfolio, because we're risk management style investing here. To put something in a in a volatile asset that can drop like 80%, you know, in the span of weeks, you know, it's just too risky. But at the very least, it's done good for my portfolio. And it's had a hell of a run going into the election and post-election. But that's basically our update for week 24, first week of the new year. Again, happy new year to everyone. We're going to continue every single week updating this portfolio so people can follow along and learn. If you enjoy the content, as always, thank you for watching. If you have any questions, comments, or criticisms, let me know, and have a good day.